My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. Other people make friends. I'm just trying to help you make a little money. My job, not just to entertain, but to explain, put in context. Call me 1-800-743-CBC or tweet me at Jim Cramer. This bull market has broken so many rules that it astonishes me every day, including this one. Dow hit 99 points, S&P advanced 0.08%, NASDAQ gained 0.36%, although it was much higher throughout the day. So many ironic, inconceivable things keep happening and have happened over the last few years that I really don't even have enough time to listen to a single show, let alone a segment. I am bursting at the seams to give you some of the more outrageous anomalies that go on every day here. So here goes. First, the Fed hit us with the most aggressive tightening cycle in recent memory. Yet some of the biggest winners over the past year are the stocks that almost always get crushed by higher rates. Toll Brothers, big home builder, the nicest homes, was at $56 a year ago. Now it's at $96. Lennar was at $99. Now it's at $105. Pulte was at $51. Now it's at $102. In any other tightening cycle, these stocks would have been cut in half. Instead, some of them are close to doubling. I remember plenty of cycles where home builders simply disappeared. And it's not just the home builders. In normal tightening cycles that are nowhere near as tough as this one, we see multiple steel companies go under. Yet Nucor, our biggest and best steelmaker, is having a remarkable run here. Anything truck and transport related is typically just slaughtered. Yet Packard, the big rig company that's behind those Peterbilt and Kenworth, just hit an all-time high. It should be hitting an all-time low, for heaven's sake. Parker Hannifin, a true metal-bending industrial, has seen its stock fall from $312 to $464 in the last year. It practically lives on the new high list. In a normal tightening cycle, Parker Hannifin would be a deep denizen of the new low list. No wonder there aren't a lot of short sellers left out there. The playbook says short the home builders, the steels, and the industrials at this point in the cycle. And this time, that playbook sent you to your funeral. Second, there's a stock out there, and it's made of teflon. And it's not DuPont, which really, well, anyway. So much has been thrown at it, but nothing sticks. And the stock acts surprisingly well. You know what stock I'm talking about? Boeing. Every day you read something bad about these guys. The 737 MAX has to be the single most troubled product I've ever come across. Customers are angry. They're coming on our air, excoriating the company. There's zero faith in CEO David Calhoun. And you know what? This stock clearly wants to head higher. There's a lot of grousing. There's the usual congressional hearing. There's endless opprobrium. And it's clear management's clueless. Yet buyers come out on any dip. There's no change at the top. Probably won't be if they haven't done it by now. How can the stock of Boeing hold up like this? Because no angry airline comes on air and says, you know what, I'm fed up. I'm switching to Airbus. They can't even if they want to, as there's an aircraft shortage. If I were an analyst, you know what I would do tomorrow morning? I'd raise my price target on Boeing right now because they're going to Congress, and Congress people are angry at them. Bye, bye, bye. Third, by this point, the whole artificial intelligence thing should have imploded, right? I mean, come on. When you get off the desk and ask people what AI is really doing for them, no one even knows, except for the usual suspects. Amazon, Alphabet, Meta, and Microsoft. They do know. They're all in. And that really is all that matters. So instead of a short-lived mania, it's an actual business. But it's not supposed to be this way. The AI craze should have ended ages ago. And yet it's still impacting stocks. The hype is still sending them higher, which leads me to believe that it isn't hype at all. If you shorted AI in all its various forms and iterations, all your investors have pulled away their money, and you're embarking, believe me, on a new, less lucrative career. Fourth, nothing good is ever fully baked into a stock. Do you know how many people told me that Netflix would report the most monster upside surprise in history, that it would show gigantic gains from both content and from Passport Crackdown, that the advertising program is just terrific? I heard it have great feedback, and new people are coming in left and right all over the globe. Ultimately, I expected a stunning, incredible quarter. But so did everybody else. So how could that be a surprise? And what happens? Netflix reports exactly what we're all looking for. A colossal set of numbers with tremendous talk about amazing programming while slagging linear TV big time, and the advertising cohort works. And even though we knew it was coming, it was the least surprise I've ever seen. The stock shoots up nearly 11% anyway. When did something like this ever occur in the past? How about never? A huge upside surprise is not a surprise at all in the stock wars. That's just not the way markets are supposed to work. Fifth, all hail Nvidia. Yeah, every day this stock makes you feel like it's never too late to buy. How the heck is that possible? How is it possible that if you order a lot of Nvidia's fully loaded graphics cards for supercomputers and you mention it publicly, your stock soars? Greatness by association? It's extraordinary, people. In fact, everything about Nvidia is extraordinary. This one company has reinvented the world by ending the tyranny of code, of keyboards, of drudge work, of repetitive processes. And who knows what else? And everything AI can do. And that's why this stock's become a juggernaut. I'd say it's just plain crazy if I didn't know the amazing people behind it and how brilliant they are. If I didn't know CEO Jensen Huang, the man I call Da Vinci, I wouldn't believe it. But I believe in it heart and soul. In fact, I'm going to say it right now. I want to be Jensen's digital twin. 6, people keep talking about how the market needs to broaden out, or else. Ladies and gentlemen, it hasn't mattered one bit. Not one. There are no big sell-offs because of the lack of breadth. It's just a pile of nonsense. Now, if you have a Magnificent 7 and nothing else, not even a 7 Samurai maybe, there's somehow a problem. No. No. I mean, you sold stocks a long time ago if you thought that all that mattered was that you didn't have a lot of breadth and that you should sell if there's not a lot of breadth. I mean, the 7 got us where we are. Well, now the 6, because I didn't really care for Tesla's quarter, but he'll pull something out that makes people excited again. If the people complaining about a narrow market were right, we should have crashed 10 times over by now, shouldn't we have? Come on. We have the definition of insanity going on here. Let's just face it. We have a small group of incredible companies run by actual geniuses, not clowns, that are worth trillions of dollars, with big balance sheets that put some nation states to shame, but they don't have militaries. And it's fine if they're the leaders. It's fine. Yeah, of course we want breadth. But when we stray too far, you end up with a stock that blows up in your face like a DuPont or a 3M or Texas Instruments. Wow, thanks for nothing. 7th, Washington gloriously no longer matters at all. We have impeachments, the government shutdown worries, and crazy, stupid fights over the Speaker of the House, not to mention a presidential candidate who needs to go 4 for 4 in prosecutions to be eligible, possibly with a Supreme Court ruling, too. We have a massive budget deficit. It doesn't play even a whit of role in the market, although the deficit only ever seemed to matter when rates got too high. And at another time, these would all be negatives weighing on the market, crushing the market. Not this time. You can't even get anyone excited about any of these things, or worried or agitated or whatever. Finally, 8th, we have this data signaling that more people are involved in the market than ever, but I speak to more investors than pretty much anyone else on Earth. And I can tell you what they really want to talk about is Bitcoin or Ethereum or some other crazy get-rich-quick scheme, a short squeeze on Plug Power, or zero-day options. If you ask me, nobody cares at all about stocks. They have become a necessary evil. So here's the bottom line. Nothing we have ever learned about the market has played out like it's supposed to for the last 2 years. Maybe it'll start playing out tomorrow, but it hasn't the last 2 years. Maybe it's different. But if we don't accept what's happened here, then I think we'll miss out on a lot of easily gettable wins, just like last year. When the market no longer reflects the playbook, you got to throw out the playbook and write a new one. Let's go to Blake in Maryland, please. Blake.
Hey, Jim. I just want to give a quick shout out to my sister's class in Stephen Decatur High School in Ocean City, Maryland.
That's one of my favorites. Ocean City, Maryland? Hey, I used to go to Rehoboth, man. I'm all over that. I'm all over that. Good fries. Really good fries.
Come visit OC at Fagers.
Okay, we'll go to Nicholas. I'll buy a pizza. Okay, what's up?
My question is about SAP. It's been a mule for me all year. I just want to know if I should buy more of it, hold on to it.
No. You had the move of a lifetime, up 11 today. Why would you buy more of it? I mean, like if anything, I would ka-ching half and let the rest run, play with the house's money, and then just go to Ocean City, Maryland. Or go to Rehoboth. I go to Bethany Beach. There, I'll buy a condo. Let's go to Curtis in Maryland. Buy him a condo. Curtis in Maryland, and his sister too. Curtis.
Yes, big booyah from Silver Spring, Jim.
Yes.
You recommended ADM in the past. After the big drop this week, is it an opportune time to buy the stock?
Well, I think that they should have been a little more forthcoming about what the heck happened there. I mean, when you put a CFO on leave and you say there's all this stuff, but you don't give us the details, it makes me feel like perhaps I would be going into quicksand. I am going to award that company the Congressional Medal of Obfuscation. Let's go to Jim in Florida. Jim.
Hey, Jim. Thanks for taking my call.
My pleasure.
I appreciate it. Jim, I need a little help with Nike. I can't understand what's going on with the stock. Obviously, you know, a month ago it came out with its earnings. It wasn't all that bad.
No, it wasn't.
No, and the CFO dumbed it down, and 20% of the stock comes flying off. But I was looking at OPCO had a $150 buy recommendation. Goldman and Citi, $135. But
all right, let me tell you
anytime-
what's going on here, all right? I'm going to give you the skinny. Anybody that sells a lot of product in China right now, it doesn't matter. People are just scared because China's like teetering on the brink of some sort of recession, depression. Nike sells a lot in China, so no one believes a single word you say if you're selling well in China. That is what's happening in Nike. One day it'll clear up. I suggest you buy Nike. I think that John Donahoe is terrific, and I think Nike's going to come through this thing smelling like a rose. Okay, not your particular pair, but just in general. All right. Nothing we've ever learned about the market has played out for the last 2 years. We got to own that. But when the market no longer reflects the playbook, guess what you got to do? You got to throw out the playbook and you got to write a new one. On Mad Money Tonight. Netflix shares surged today on a revenue beat, strong subs, and better than expected guidance. With the NASDAQ 100 rallying to new record highs, I'm offering a read-through on what the results tell us about the rest of big tech. And Netflix isn't the only earnings story I'm watching. You know what? No one's focused on the drillers. I like to go where people aren't sometimes. I think there's something to buy there. And one of my favorite parts of the Investing Club meeting, when we do it every month, we have it, is we hear from you. We always have more questions than time. So tonight, I'm giving you a taste of what the club is all about right here on Mad Money, answering some leftover questions. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.